Good morning to you and your king. So good morning, everybody. It's Thursday. Welcome to YouTube. Thank you very much for being here. Please remember to thumbs up. Please remember to subscribe. Now, why should you subscribe? Well, when I do these events, you'll be notified if you click on the little bell. So when I hit start, it goes bing on your phone or on your computer, you get an email, whatever, and then you click boom, and then you're in the room. So that's the major upside. Today is Thursday, May 17th, 2018. 10-year T-note, solidly above 3.0. Very nice. Oil going up. Very nice. Europeans are mad. Europeans are getting together in Bulgaria to solve their problems. That's great. Good. So lots of stuff going on in the world. It seems to be a good world. I think we should save it. The world is going to rely on us, which is fine. So anyways, hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Thank you for being here every single day, either here on the Forex.Today YouTube channel when I do live events here, or at Forex.Today when I do live events there. Either way, thank you for all the effort that you put into learning Forex, because I know how tough it is. And really, I started way back when there was no information, no resources. It was unbelievably expensive, incredibly volatile. Other professional investors that I knew in the world, they would laugh in my face because A, I was a Forex trader, and B, I used technical analysis. So I had to overcome all of that. And here I am. So I'm here to share everything that I've learned because I want you to be a success. Now, why would I want you to be a success? Well, I am the chief FX market strategist for tradersway.com. That means we're a broker. So if I can earn your loyalty and respect, and you go to tradersway.com and open up an account, here's what happens. We develop a symbiotic relationship. The more I help you, the better of a trader you become, the more confidence that you have in your skills, and the more that you trade, and the more that you profit. Therefore, your account size grows, and over time, your lot size grows relative to your growing account size. And therefore, we earn our competitive fees, and we can pay the bills, pay for our staff, all that kind of stuff. And you have a successful trading business. So there's our business model. We want and in fact need you to succeed. And if you succeed, we succeed. And that's the type of partnership that you want. Some brokers, when, I don't know, like when the Swiss National Bank lies to the entire world and causes an exogenous shock, some brokers go out of business. Some brokers have to borrow $500 million overnight. And other brokers like Traders Way are not affected at all because your trades are in the open market, as they said they would do. So anyways, my name is Wayne. I ask you to please ask questions. I ask you to please get involved. I ask you to use the chat, but I also ask you to be courteous and professional. This is my office, so let's keep all the comments professional, and 99.9% of the time that is the case. So thank you for being here today. Now, what currency pairs would you like me to cover today? Hassan says, tell us about your Apple stock. Yes, and Joe brings it up. I don't know why you're bringing it up today, but yes, I did buy Apple at $6. Yup. Peso, gold, euro CAD, pound yen. Oh, do I trade stocks? No. Okay, I don't trade stocks. Never liked them. So before I was a forex trader, I was a venture capitalist, right? So think of my mindset, like who buys stock? I'd rather invest into a new technology when it's young and invest, 1 penny per share and sell it to some other idiot for $100 a share. So I've never been someone that just is buying in the open market. Plus, I kind of think that any CEO that's compensated with stock and stock options is just not going to tell you the God honest truth. Either he's going to lie to your face or he's going to believe his own nonsense. But I think it'd be very difficult. I like trading Forex first and foremost. Stock indices like the S&P 500, for example, I like trading fixed income, specifically like the 10-year T-note and that kind of stuff. But even then, like, what's wrong with buying or lending Ford Motor Company money and they pay you, 7% a year in interest? I mean, fixed income is pretty interesting. And then, of course, commodities, primarily gold and oil. But, you could dabble in wheat and you could dabble in copper. And, I don't know. I've actually stood on the trading floor of soybean meal, right? I've actually stood in the pit because it's actually, when you walk onto the floor, the trading floor of the Chicago Board of Trade, the first one you run into is soybean meal. And you're like, oh my God, I'm in soybean meal. And then you're like, I don't want to be in soybean meal. And you're in this big room. You're like, this is a ginormous room. And then you look to the left. And you're like, what? And you go through a giant doorway into a room that's 10 times bigger. And you're like, oh my God, what's that? You go over there and, there's gold, or there's not gold, S&P 500 and S&P 500 options. And so very interesting place. So, but over the years of trading all these different things, I've found, based on the taxation system in the United States of America, it's better just to focus on Forex. But if I look at fundamentals, macro fundamentals, global macro fundamentals, and I think risk on, not only does that tell me kind of where gold is going and where oil is going, but very often it tells me where copper is going and wheat is going. So you can use all this type of information. And if I know where those things are going, I know where commodity currencies are going. And if commodity currencies are going one direction, I know where, the demand side of that equation is coming from. And then I understand why that demand would be high or low. And then that leads me to another thing. What you find is my point of view is the world works in Newtonian fashion. Newton, remember that dude? So everything kind of works. And if it doesn't work, if it breaks, that tells you important information too, but it rarely breaks. But it has broken. So that's that. So yeah, I can cover all these things, oil and all that kind of stuff. Where did you sell the stock? I called my wealth manager at Merrill Lynch and I'm like, Steve Jobs is dead, sell it. That I sold it at Merrill Lynch. Interesting question, but sure. All right. So let's just start top left. All right, fine. All right, do you guys remember doing this analysis? We have little reminders and stuff. It seems generally fine, right? Seems generally fine. I have the bigger colors here. Up, 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 down, 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 up, 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 off the shoulder. Not on the short term, you can see it's not exactly precise, but the whole general strategy is head and shoulders. Inverse head and shoulders, right? Okay, so that's that. Is it perfect? No. So then within that, we have more micro. a micro, right? So when you come into this gray zone, what we talked about is if there's going to be an inverse head and shoulders, then near this right shoulder, which hadn't formed yet, if that occurs, you would want to look for a reversal pattern. So like the following day after that, we're down here, and I'm like, well, it's not, it went a little further, but it is held up at a support pivot. Okay, and it has formed a double bottom. So you could trade the double bottom, but then I set it up here. And remember the big speech about the 1, 2, 3 reversal pattern, and that I coached and mentored someone years ago that needed consistency, and I said, well, maybe you should just trade double bottoms with 1, 2, 3s or double tops with 1, 2, 3s. 100 times in a row and get the consistency and all this kind of stuff. And we were in here yesterday, and I think we were actually drawing this at the time. So I said, well, this is your little buy zone off this higher high and all that kind of stuff, and it should reverse. It's a reversal pattern at a reversal point inside of a reversal pattern on a larger macro and all that. Does anyone remember that from yesterday? And the day before, and possibly the day before that. So I believe 24 hours ago, we were right here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 1, 2, 24. Yeah, all right. So yeah, we were right here. So I drew it all out, and here's the 382, and somewhere between, here's the sweet spot, and here's the blah, 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 blah. Amateur hour. Okay, cool. And that is now up 71 pips. Cool. Some people have to work all day for that. Now, to really put that into perspective, we talked about that. We talked about that sort of in here. Okay. What pivot is currently our top pivot? By the way, can I get a like for crying out loud that I spent 2 or 3 days setting up a 70 pip move for you? And we actually drew the entry as it was happening, and I went into a 20-minute speech of why it's so important. Can you at least give me a like for crying out loud? Stop being a holdout machine. Come on. I don't know, Wayne. I have to move my mouse over there. Thank you. Gee whiz, right? Oh, someone took it away. Yeah, okay, R1. So when you have an R1 top, what bottom does it predict? Yeah. Cool. Yeah. So look at the precision here, guys. R1, 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 R1. S1, S1. You know what would be really cool is to write that rule into a book, have it published, right? And sit in the Library of Congress for like 10 years, and then pull that book out and find out that the rule still holds true. Wouldn't that be cool? You've shared the rule with 100,000 people. and it still holds true, I think that's really cool. You remember, it's not that I read someone else's book on the rules of trading pivot points, because pivot points didn't exist when I started trading them. I had to have them custom programmed. Into my charts. So it's older than your dad's pivots. Anyways, so that's just an observation that I had. So anyway, so here we are. Great. So what does it do now? Well, you still really should treat this as a range. Now, you're anticipating a break if you traded the inverse head and shoulders. And remember, we talked about trade planning using your mind's eye. So I said up here, you need to imagine the support and resistance. So I drew out the support resistance. Then I said, imagine with your mind's eye, it falls back down to some level of support, somewhere near this left shoulder. And we drew that. That's the support now. Imagine with your mind's eye that when you get down to that gray zone, you see a reversal pattern. What kind of reversal pattern is it that you envision? Is it a Is it a double bottom, for example? Is it a hammock? And we talked about that. So all of that is, I think, the most important thing here. It's not that it worked, because it still might not work. The market hasn't reversed yet, and it doesn't have to reverse. But what's important was you were ready a day in advance for it to fall down, or even expecting it to fall down into that zone, and then waiting somewhere around here for a double bottom higher high type scenario, right? I mean, that's one of the, right? And I said, isn't it easier to trade when you recognize what's happening because you've already anticipated and seen it inside your mind? And you're like, oh my God, there's my double bottom. That's the double bottom I was talking about yesterday. Look, it fell 80 pips into a support, one pivot, and now it's perfectly double bottomed. Maybe that's the reversal pattern I've been waiting for. And therefore the trading gets easier. Now, you could move your stop to break even, you could take profit. We don't know if it's going to go further. So I would still treat this as range bound, really. We would all love for it to go higher. It doesn't have to. All right? It doesn't have to. Whoever sold it here and here could just sell it again. And that's that. Okay. Somebody asked about the, Hassan says, what's the meaning of 1, 2, 3? All right, let's do a quickie. Okay, double bottom is 1. We should do this. Okay, 1, double bottom. Ooh, it's big. All right, 1 is the double bottom. Do you see the double bottom? Cool. Double bottom. Number 2. Higher high. Where's the higher high? Well, how should we draw this? All right, so we have this high, this low, that high. Okay? Great. Number 3. You can call this high or low. Let's just call it that. Number 3, high, low. Okay. And we already have that defined as this area yesterday. Okay, double bottom, 1. This high being higher than that high, okay, is 2. And then somewhere between the 382 and 618 Fibonacci retracement from the high to the low, you buy it. So yesterday I called it the sweet spot. I said it could be this 382. I said it could be this pivot point. I said it could be a psych level. I said it could be off this shoulder. There's all kinds of things that you look for, but it doesn't matter. It's generally just buy the dip. Okay, easy peasy. But all of that is irrelevant if you didn't expect it a day in advance. People that traded it way after the fact have, they picked up a few pennies here, but the fact that they didn't have a trade plan advance means maybe they got lucky and picked up some pennies late in this move, but they're going to lose some pennies early or late in the next move because they just don't have trade plans. Right? It's not that they don't understand technical analysis. They're just not planning their trades. They're reactionary. You cannot be a professional if you're reactionary. Right? Hey, my pleasure, Casey. So just think of it that way. Like, no matter how awesome you are at technical analysis, you cannot be a professional if you're reactionary to the market. What's going to happen in the market tomorrow? I don't know. Well, you're not a professional. Now, I don't know either, but I can come up with a really nice plan. And if I get it right, I'm supposed to trade it, right? So that's kind of where you get. How do you create a trade plan? Well, look what we did here. That looks like economics. Yeah. You want to get into a Douglas Cobb function with constant returns to scale? Solo growth model, ISLM. You can get knee deep. So anyways, what I said yesterday, or was it Monday? Earlier. I said once you get down into this area, oops, let's do it this way. Once you get down to this X, that was our target for the month of May, so we're just done. Okay? The weekly swing, if you were a bear, the swing, oops, I didn't really want that. Oh, and I killed my GDP. I don't want to kill my GDP. Don't go away, GDP. I love you. All right, let's kill that thing. All right. The weekly swing is from here to here, which is the same target. So if you're doing monthly pivots, you're supposed to stop trading. If you're doing weekly pivots, I suppose you can try to sneak this in here. You're supposed to stop trading, guys. Remember that whole patience and discipline thing? You remember that time we had CAD similar to this, I don't know, a month or two ago? And CAD dropped like a ton of bricks. And we were in a situation like this where it had fallen just a bit too low. The weeklies were just outside the monthlies. And I'm like, look, you're going to think this is aggressive. Right? Do you guys remember that? I'm like, you need to just stop trading this completely. And if it reverses, don't be shocked. Do you guys remember? And it reversed like very significantly over the next couple of weeks. Nobody remembers that? Okay, thank you, Wes. Chuck does. Great. Mathia Elahan. Mathia Elahan. I like that name. Mathiel Elhan. Mathiel Elhan. That's nice. Cool name. Yeah, all right, Captain Fact says, and you can't question Captain Facts. So, anyways, I don't know what's going to happen next. I'm confident enough of a person to tell you that. The second thing is now, then I just simply do the technical analysis. You know what the technical analysis tells me to do? Stop selling it. Dannard, if you can't see the YouTube video, you're either on the moon or you, I guess, need to refresh or something. But it's like YouTube. Like, nobody has problems watching YouTube. It's YouTube. Okay. So anyways, that's the word of caution here. I wouldn't... See, here's the problem. I don't necessarily want you to interpret that it goes up. But we're in a situation where I really don't recommend selling it anymore. And if other people think that, then this could also double bottom, higher high, 1, 2, 3, and slowly work its way up. So why don't you look at this and say, I wonder if it'll double bottom, 1, 2, 3. And you start planning it like I planned the other one for you. I'm not going to say it's going to happen because I don't know if it's going to happen. But that's what a trade plan is supposed to be, right? A hypothesis, right? Make sure you have scientific method in your trading skills. Okay? It's a big question mark, right? Oil. So, many weeks ago, we had 73 as our target for oil. Can anybody confirm $73 being the target for oil, for WTI? Weeks ago. Jacques says, would you still trade daily pivots if you are a day? What? Would you still trade daily pivots? Oh, you mean because we've gone through them? Well, no, it would just roll over. No, it was 73, but 72 is already done. No, it's $72.80, so 73. It wasn't 72. It's just factual. I mean, that's it. The conservative target is 72, 79 and a half. The aggressive target is 74 and a quarter, so 73. Okay, not 72. Okay, Hassan? Remember, I tend not to have opinions. If you're a bull, by definition, that's the target. I don't care about 73, me personally. Yeah, Prav, my feedback on euro dollar is that you're supposed to stop selling it. It doesn't mean it won't fall further. And it's not my job to talk you into trades. It's not my job to talk you out of trades. But I'm just saying, when you've hit the weekly target and you've hit the monthly target, I don't think you should expect more if you're disciplined, right? And if everyone does start taking profit as they're kind of supposed to, it might retrace. I'm not saying it will, but it could. So your best thing is, if you'd shorted, right? If you'd shorted throughout the last 4 weeks of trading, now's the time to stop shorting. Go on vacay. Okay? So just imagine all the European financial leaders in Sofia, Bulgaria, They come out and say something intelligent. I'm sorry I couldn't do it. They come out and say get something productive done, and that somehow strengthens the euro. But you know, it's just a party, right? Like they're not going to do any work. When was the last time you saw European work in the middle of May? Like, it's just silly. Maybe in September or October, but May, because May is practically June, and June is near July, and everyone takes August off. So why even do work in July? So you know, it ain't good. They're not going to do anything. So, anyways, but maybe something they write a nice press release, right? They spend $100 million on a summit, and they write a press release. 100 million well spent. So, anyways, maybe that makes the euro go up. But really, what I want, I don't really care about the euro. What I want is growth. Okay, I want growth. Global growth, global demand because of the growth, demand for things like commodities, right? And therefore, I want to see the US dollar weakness. That's what I want to see. Now, I understand the interest rate differential and stuff, but life's not that simple, right? I know that, right? Anyways, I know what the textbook says. I just disagree with it. Okay, let's move on. Here's our CAD. Okay, do you guys remember setting this up? If you think oil is going to hit 73, what direction are these pivot points predicting? Up or down? When you look at this, you should be able to think about what I'm thinking. And what does this say? Up or down? See, I'm glad I'm asking questions. Like Hassan, man, we need to work on a lot of things, my friend. Which is fine. I'm glad you're involved and confident enough to be vulnerable and share, right? But all this stuff, we need to work on that because it says down. Okay. Okay, it says down. Now, it's not really a good trading pattern. Now, I'm not really saying, like, this isn't actually a situation where you use fibs. But I use a fib here, not because it's the right strategy, but it's like a memento to tell you if you're trading the lower low, right, you're looking for a retracement. Okay? And that's what you should be seeing if you're a bear. Okay? And you can see what's happened is this, right? I don't think it's going to be that easy. So could we get held up here? Oh, for sure, right? And look at this going on here. And oil's at 73-ish, but Brent is at 80, isn't it? $79.89, $79.96. Look at that. You got to have your thumb on the market, huh? So what is going to happen when this bad boy hits 80? Yeah, Charles, but when I'm talking USD CAD, I'm talking oil. Okay, most of my templates have the watermark, so I apologize. Like this one does. Okay. All right. So what does this tell you guys? Well, it's a good place for market participants to take profit. Okay. So on the first day of the month, how many people here were bullish on oil prices April 30th, May 1st? Remember, you can't just make this, you shouldn't be deciding like on a daily basis whether you're bullish or bearish, right? So like were you how many people here were bullish yesterday, last week, last month, the month before that, and the month before that? Like you don't even need to look at the chart. That's where you're supposed to be, by the way. How many? That's you, right? That's Mickey, I believe. Mickey, are you going to meet with the portfolio managers after this? Yeah, cool. So not many people answering. All right, well, let's put it this way, guys. Okay, that's the buy zone. I kind of have to get it in here. It's not good because it's an ellipse. There we go. No. All right. This is the buy zone for the month of May. And if you bought down near that central pivot at 72, your target is between 80 and 81. Cool, right? So whoever bought here, or earlier, of course, they're in a situation where they should probably take some profit. Okay. Predicted top for January. Predicted top for April. Predicted top for May. It's not perfect. Okay. This is the buy zone. This is the buy zone. This is the buy zone. I hope you fully appreciated that, right? This is your buy zone. In March, you should have been buying Brent at 62. In April, you should have been buying oil at 67. In May, you should have been buying oil at 72. It's nice, right? No? So anyways, if people take some profit here, or it moves sideways like this, okay, look how it did nothing for 2 weeks. It's plausible that we kind of hang out here for a while. And what I'm trying to get to is, and I shouldn't leave it at Brent, but what I'm getting at is this CAD could be neutral for a while, or it can weaken. Okay? So you might not get what you were expecting. Oh, that's nat gas. Hang on now. Right, where's my WTI? Oh, yeah, put it up there, bro. Cool. All right, let's take a look. Pound dollar, nothing. Cool. Let's move to, I think somebody asked for pound yen. Okay. Okay. All right. Okay, let's start with there. Is that a logical place for a double bottom to form? Oh, sorry. I have to redraw it, but yeah, let's do it. Change the template. Yeah, and the answer is it's fairly close to the support. Now, I think I remember telling you that I didn't really like the setup. It was hard to I didn't want to like get you betting against the obvious trend. But we're kind of near a support, monthly support pivot. But look where it opened that week. M2. Okay. What happens next? So what do you do next? Well, you can look left off of a high. You could look left off of a low or a neckline. You could look right for psych level, which is about here. You could look right for the pivot, which you can clearly see here. And then you could also use Fibonacci. And your sweet spot is somewhere between the 382 and 618. And so with all of that, there's a little bit of here. You don't really like the 786. The lower low is fine. You can see that actually worked, but that's besides the point. But you can see like the sweet spot, the psych level, everything else, right? So your trade plan when we were up here could be like that. Okay. And then on Sunday when the market opened, what's the buy zone if you're a bull? And that is here, using swing trading theory. Okay. Can't quite grab that anymore. Well, anyways, it's in there. Okay. So you just simply had to be a bull. I'm not telling you you should be a bull, but I'm saying if you're a bull, you could have fit this together. You're kind of fitting it in. That's what a bias is. Okay. if you thought it was impossible, for example, if you thought it was impossible to sell this, yeah, it was Green Day, by the way, good call. If you thought it was impossible to sell this and all you could do is buy it, and that's called a bias, it's plausible. You could be trading this north. Okay. Now, in reverse of that, if you were a bear and you could only sell this, this is an obvious sell right there. Okay. This is an obvious sell right there. Just in your face. Actually, that's not even it. Sorry. So that it's just obvious that it was failing. So anyways, your sell would have been down here and you never had a chance. So, there's just not much bearish. So now, if you're a bear, you're going to look for a reversal pattern here, especially, well, it's Thursday though, isn't it? It's a little late in the week for counter trend trading, but I guess you could. I don't know. But if you're a bear, I guess you could look for it in here. It just seems not quite right. So, I don't know. That line held, huh? Cool. So what do you think? On its way back to $1.50 and then drop? Cool. All right, so just going through the motions. How else can I help you? Aussie CAD. That's one of the pairs I don't watch because it doesn't make sense to me. Yeah, I don't have it. Sorry, I don't trade Aussie CAD together. They're both commodity currencies. So it's like pricing gold in gold. I'm like, well, it's the price of gold. So give me another one. Euro CAD. Okay, so you're expecting oil to rise or fall, James? Well, I can't sell this. Nice trade, though. Did you swing trade it on Monday? So, like, looking at it last week, guys, if you're a swing trader, here's your Tuesday trade. There's your target. Done. And then on Monday, if you're a swing trader, this is the clear sell. There's your target. It's great trading, but it's done. So that's all I can tell you, James. I don't know if it's going to go up. I don't know if you're going to counter trend it. If oil falls, CAD will weaken, but it's euro. So I'm glad it's trading very technically. But yeah, I don't know. It's done. If you would have asked me on, Monday, that would have been the sell. You see that? What is it going to do now? Honestly, I don't know. But it's done. So you should take your profit and run. Should you counter trend trade it? Well, now you got to wait for a double bottom, higher high, 1, 2, 3, and all that kind of stuff. So the other thing is maybe, maybe it does this next week. Come on. I've done that once or twice today, right? I would be setting up this trade for next week. Yeah. But that ain't going to happen today, right? So James, are you in the swing trading group? Oh, yeah. Well, that's something that I cover on Fridays, and that would be something that we would look at. So write that down in your notes that if you're going to want to be short that, maybe Friday. It doesn't seem like it would be today. A couple of people asked for CAD yen. It's going to come down to your oil price hypotheses. Okay. All right, so what have I taught you? Anyone that's taken the swing trading course, and by the way, if you haven't taken the swing trading course, I think it's, I need to say it in a way that's not self-promotional, but it is self-promotional. But it's something I think you need to know very, very, very well, right? How to swing trade. So you can go to fxbootcamp.com and take the course. It costs money. Sorry, right? But you just kind of need to know all these details. So when I look at this, there's obvious trading going on here if you're a bull. Okay? And the subtleness in here is that there's also a counter trend in it. Okay? And having looked at oil and stuff, if Brent, let's say, consolidates at 80 and stops WTI in its tracks, do you think CAD yen's going to continue going up? Or is it going to, let's say, at the very least, stop going up? Tavon says, I like to keep trades open a longer time. I agree with, I like to scalp though too. So one of the things I thought I would do like in the next 30 days or something is just do like a live scalp session where we just sit around for, I don't know, hours on end, and we'll see how many trades can be made and how many times I can make 10 pips. Seems silly to me, but I think a lot of people would enjoy it. But I like to scalp, spot, swing, and all that kind of stuff. But our swing trading group, once a week we set up trades that are like 150 pips each, right? But then our monthly meetings, we set up trades that are more like 300 pips each. So anyways, what I'm thinking, if oil consolidates at 80 on Brent, which is British oil, by the way, if you didn't know that, right? Then at the very least, this should move sideways, right? And all of this has that priced in, okay? Also, if you're a bull and Sunday opens up like this, remember you would have been like here. How do I do this? Okay, there we go. So Sunday opens like this and you're a bull. What do? What do I teach you? To use the moving averages here. Where's my X now? Ride the 21. Isn't that beautiful? That's what I teach you. Hang on. Okay. If you're a bull. Now, if you're a bear, you were selling here. But if you were a bull, you were buying off the 21. Not the 55, not the 200, not the 5, not the blah, 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 but specifically the 21. You ride the 21 up. So here it is. Oh, look, the 21. And it worked, right? So then we get up in here and I don't know. It depends on what you think oil is going to do. Is Brent and WTI just going to cruise, let's say, WTI around 73, 74, Brent around 80, 81. If it just kind of moves sideways, then CAD ain't going to go up or down. But if there's going to be a retracement in oil, if oil's coming back down, then CAD yen's probably, again, at the very least, move sideways, but probably retrace as well. Well, so what about the yen, right? Well, does Japan like paying $80 a barrel for oil? No. So did you guys read the EIA report that came out yesterday? I'm sure you downloaded it and read it. And in that report, which I'm sure you read, it talks about how oil prices being in this range and higher start to hurt global growth. And that OPEC has been successful in drawing down inventories, right? And with what's happening in Venezuela and the removal of Iran, the fifth largest producer of oil in the world, from the market, then we're going to go from a year ago having a glut of oil to the possibility of actually being short of demand, since demand is increasing. But what also happens around the 1st of June? Oil inventories peak. So we might have a shortage of oil, right? And growing demand, and oil may actually go much higher than 80 based on all of this over the next 6 months to a year. And if so, that could start slowing things down, which could be a bad thing. But also, Europe has been begging for inflation, and well, suddenly you'll get inflation in Europe, but it's simply oil prices going up. So it's sort of a turning point fundamentally. But if you were hanging with me 9 months ago, I'm guessing 9 months ago, like September, I think I did a whole webinar on why everything has just changed, and that everyone should consider being a bull on commodities and commodity currencies. Does anyone remember that? Like, it was a day, like, now that's it. We've turned a corner. This possibly could be the thing. And it could, right? All that kind of stuff. So now here we are a year later, and things have changed very significantly. Yeah, a couple people do remember. Yeah. Cool. So you got to put that into your analysis, right? How does that make you feel? Okay, one more currency pair, and we'll call it a day. One more currency pair. Well, how does one get into the swing trading group? Hassan says. Well, first of all, Hassan, you have to complete the swing trading course at FX Bootcamp. Because I'm not teaching you how to trade. We're just setting up trades. So you have to go to fxbootcamp.com, pay money to take a swing trading course. I think it takes you 16 hours or something. And then once you have that under your belt, then you have to pay more money to join the swing trading group. But it's basically a closed group right now. And I'll probably reopen the group in September. So maybe you take the swing trading course now and then join in September. It's your call. Pound Kiwi. Yeah, that's a good one. Pound Kiwi, pound Swissy, pound Kiwi, pound. Yeah, maybe I have it here. Pound Kiwi. Come on, Ren. Yeah, let's try it. Pound Kiwi, I have one. I have a pound Kiwi. I have pound Kiwi. Cool. Nice. So what do you like about this? Yeah, Hassan, that's fine. Yeah, you're going to need money, Hassan. So I don't know your situation. It's not me to pry, but you're going to need money to trade Forex. So, right, that's just that. Did you guys know that Harvard charges me money? They have no problems charging me money, right? And then you got to drop another $1,000 on textbooks, and then you got to fly to class, and you got to. I'm moving to Cambridge in a few weeks. You know, it's amazing. Some people drive Lamborghinis, other people go to grad school. I'm not sure which one's a better use of money, but I'm pretty sure it's Harvard. So it's an interesting world, right? Everything awesome requires money. Of course, there's love and respect, and okay. But if you want a Tempur-Pedic, right, you need money. So what I'm trying to say is, if you feel like this is what you want to do for the rest of your life, right, then you need to study this like you're at Harvard too. I spend 50 hours a week. It's more than a full-time job, right? Let's just say a full-time job. Let's just say it's 40 hours a week I spend on Harvard. So if you're not spending 40 hours a week on Forex, and I don't mean trading, I mean studying, then you're not getting sort of the education that you're going to need. And also, you should be working part-time. So like if you can't afford to go to Harvard, what do? Student loans and part-time jobs, right? So you should take a part-time job on top of your 50 hours a week of studying Forex, seriously studying Forex, and save your money so that 4 years from now, you'll have a bankroll of money that you've saved over the last 4 years, but you've also studied for 4 years. So at the end of it, when you graduate from the University of Forex, you'll have whatever amount of money, 100,000, 10,000. I don't know how much money you can save in 4 years, but let's say you do. Now you're bankrolled and you're highly, highly educated and skilled in this thing we call Forex. Now you make your mark in the world. It's such an easy thing to do on paper. You understand that? And we all know that that's true advice. If all you did was make this your day, what do you do most of the weekend? What do you do most of your evenings? Okay? I know you probably have another job too, and you probably have children and a spouse that wants attention. Yeah, well, cry me a river, so do I. I got all that nonsense too. I have had all that nonsense too for the last 15 years. Okay? When I was getting a tour of the hospital before my first child was born, the nurses took my wife and I and a few other couples with pregnant moms. We go around the hospital and everything, and then they meet at the end, and they're like, "Do you have any questions?" And I'm like, I put my hand up, and they're like, "Yes, sir." I'm like, "Yeah, do you have Wi-Fi? Because I'd like to bring my laptop, and I'd like to trade Forex while I wait around for this baby." Right? So I've been there. I've done that. I've done all of this, right? So I'm telling you, it may require that kind of effort. It really will. You really need to take the video game aspect out of it, and you really, really need to say, all right, I have a 4-year plan, and start breaking it down. Well, what percentage of the market do you think has a 4-year plan? Or make it a 3-year plan. That's what I have in my book, right? What percentage of the retail Forex market has a 3-year business plan for their Forex trading business? What percentage? Yeah, 0 point something, right? But one of the things I I read or realized early on is that let's say everyone is trying. Let's just say they're even trying their best, whatever that best is. You're trying your best, I'm trying my best, the other people in this webinar are trying their best too. Okay? But not everyone's best is equal. We all have the same opportunity. Look, you buy, sell, or hold. I mean, it's the same thing. Why isn't it easy, right? So it comes down to, if only 5% are going to be successful, then I need to figure out, since we know it's technical and fundamental analysis, again, it can't be that difficult, right? So it's going to come down to, am I willing and able to do what 95% of other people are not willing and able to do? I realize that's what it is. I have to be able and willing to do what 95% of every other person in this chat room and every other person that's watching the video in the future, whatever they're doing, I have to be that much better. And that's the only secret, because I know they're going to learn technical analysis too. Some of them are going to learn fundamentals, but we just dropped 60% of the market right there that never even learned fundamentals. Right? It's like learning like skipping the math or something, right? Like you just can't skip the fundamentals, but 60% just did. So now we're down to the last 30%. So what do I need to do? And I need to do things like that, is what I realized. That's what I need to have, a 3-year plan. So, right, so to Hassan, I guess it was. I'm like, okay, you need to sit down and have a 3-year plan. What specifically, right, specific, measurable, attainable, realistic, and timely goals do you have over the next 3 years for specifically learning everything you could possibly learn about Forex? What order are you going to put it in? What methodology? When are the due dates? What happens if you miss a due date? Do you cut a finger off? Do you sleep in a bathtub? Like, what happens in these scenarios? You should write it down. At what point will you learn swing trading? When are you going to learn scalping? When are you going to learn fundamentals? When are you going to do this? And when are you going to do that? When are you going to put that together? What about your track record? And what about this? And have that timeline. And once you got all of that figured out, when are you going to have enough money, realistically, when are you going to have enough money to actually start trading Forex? When are you going to be able to bankroll yourself? Let's say, I'll just make up a number, 10 grand. If you have nothing now, well, when can you pull 10 grand together? Or if you have something now, when can you pull 100 grand together? Will it take you 3 years? Will it take you to, will it require a part-time job? Will it require you selling stuff out of your yard and a boat in your backyard with a tarp over it? Like, what are you willing to do that 95% of other people are incapable of? And maybe when you make that decision, maybe that's what makes you a success, not your technical analysis, not your crossover system, not your London breakout crapola. Maybe it's the fact that you're tougher, smarter, and stronger than 95% of other people in this market. Maybe that's what it is. And when it came to me, like, that's what I believe. When it hit me, I'm like, oh my God, that's it. That's it. I have to earn it. I have to be better than the other person on the other side of my trade. If I buy, I have to buy at better prices and have better reasons and have better risk management than the person selling. That's all I have to do, right? So I write all that down, and you know what? I did, right? I did have a 3-year business plan for my trading business. Now I do, but do you want to, like, for example, do you want to be a hedge fund manager? If so, when's that going to happen? And to become a hedge fund manager, what are you going to need? You're going to need a 3-year track record of success, maybe 5. So now that's 8 years out. Well, you can flow that. Well, when? And you're like, what, Wayne, now you're talking about it 8-year business plan. I have to get rich quick. I have to become a brain surgeon quick. Well, think about the people that tend to have a lot of money. They had a long-term vision, right? Unless you won the lottery, and even those guys lose their money, right? Most of the people that are hugely successful have long-term visions, right? For themselves. It's not even a business. They believe the bigger picture, right? So I would say, look, let's say you don't have a lot of money now, but you're a tough son of a gun. You're willing to do whatever it takes. And someone comes along and says, did you know, I understand you have nothing now, but in less than 10 years, you can become a millionaire. Well, that sounds pretty good, but all you have to do is work your ass off for the next 10 years. Oh, Wayne, well, I'm not willing to do that. Ha! By definition, you won't be a millionaire. Thank you. MoveOn.com. But what if your response is like, really? You see what I mean? Only 10 years? What do I have to do? You have to work 100 hours a week. So, you want to make $10 million a year working for Goldman Sachs? All right, first of all, be the smartest kid in your high school. Beat out 1 million applicants and get accepted at Harvard. Work your butt off at Harvard and get straight A's in hardcore courses with math in it. And beat out 30,000 people for a summer associate's job. And then when you get there and you're inside Goldman Sachs, be the best out of all the associates so that you're the only one standing and there's a bunch of dead associates all around you because you outworked them. And then Goldman Sachs offers you a job and you work 100 hours a week indefinitely. You'll make a lot of money. Oh, well, that's too hard, Wayne. Well, there you go. So here's the problem now. What if you, right? You're like, well, Wayne, I can't get into Harvard. It's too late, or I don't have the right background or upbringing. I don't have enough money, whatever. But why don't you take that work ethic and say, I work with Wayne every single day. That's my Harvard. And I'm going to take the work ethic of like, dude, I just got 100% on my final exam and an A+ on my final paper. Right? Like, did that just fall out of the sky? Who the hell gets 100% on a final exam? It's sick, right? So, look, all you have to do is work really, 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 really hard. 50 hours a week or more just on Forex for 3, maybe 4 years. But by then, really hone your craft. And then from there, be able to translate that into a track record of success because you can plan your trades like nobody else. You are the world's greatest trade planner. Every trade you make has solid logic. Days, weeks, months in advance because you studied this market day and night for 3 years. Blood, sweat, and tears. So now you translate that into a track record of success for that's another 3 years of sacrifice. So now, 6 years from today, you have a solid track record of success and you are solid, knowledgeable. You could sit down and talk technical and fundamental analysis and trading and markets with any professional in the world and hold your own. In fact, you'll be shocked because you'll be significantly better than these guys that are already making $10 million a year, $100 million a year. You're like, dude, I am 10 times smarter than that idiot. Well, what's the difference between you and him now? He's trading $1 billion and you got 10,000 in your account. Cool. So now you have 3 years track record of success. You can hold your own in any conversation. And now you go out and start your own fund. And for the next 15 years, you trade this thing called Forex. And slowly but surely, with low volatility and reasonable risk and consistent returns, you grow that in to a personal net worth that you can't even fathom right now. But you'll be 20 years older than you are today. That either excites you or it don't. Well, I hope it excites you. Right? I hope that excites you. Because you can. I don't care who you are, who your mama was, who your daddy was, where you went to school, what side of the train tracks you're on, how much money you have, how pretty you are, how tall you are, what your weight is, what your sign is. Nobody cares. In other parts of in other industries or in other sectors and other businesses, all of that matters. So it's your opportunity or you blow it. Whatever. Treat it like a video game. See how long it lasts. Well, that's what 95% of people do. I hope you want to succeed, and I hope you're willing to work your butt off. And I think when you look around, and you probably already know, but just look around. The vast majority of wealthy people have long-term visions. They're running businesses. They have focus, all that kind of stuff, and self-efficacy, right? They have confidence. They're open-minded, they're confident, and they're driven, and there's long-term stuff. And every other rich person inherited their money from a parent that did have that type of personality. So if you are entrepreneurial and you're willing to work your butt off and willing to put in the time to become really, really, really good at what you're doing, then you'll be a success. And I don't care if that means you're a concert pianist, a basketball player, a Forex trader, a CFA, financial analyst at Goldman Sachs. You have to be really good and work your butt off. And that's it. All you have to do is beat 95% of the people in our market. But I think what you'll find is if you're willing to do that, it's easy. So I'm sorry to talk too long. I don't know how we got onto that. But it's late, so I apologize for taking up too much of your time. I know it's valuable. So thank you very much for being a part of my team every day, and the likes and the subscribes, all that's important. And if you like trading with me, I hope you consider opening up a trading account at tradersway.com. We're going to do some special events over there in the next few weeks. So if you want to be invited to those special events, open up an account. Even a demo account's fine. Just give us an opportunity to earn your business, okay? So peace on earth. May the pips be with you. May your profits be above average. And I'll see you tomorrow. Yeah.